Monday, we started with intangible assets, and we looked at what is the definition of an intangible assets and how you can identify intangible assets. And lastly, we were looking at how to recognize intangible assets and the measurements of intangible assets as well. We didn't finish these slides. We ended on the measurement of intangible assets, and I referred you to do example 7 on page 476 of grouping gap. Did you go through that? Yesterday I mentioned that you should go through that and go through the rest of the slides. Were you able to do so? Silence. It seems that you did not do so. Okay. Anyway, what we will start with, we will go through the exercise on grouping gap, and then we'll continue from there. So this is grouping gap. Let me go to the relevant page, which is page 476, and we will deal with example 7. This is the example that deals with recognition and initial measurement. I'm sure you can all see my screen. Example 7. On 30 June 20X4, B Limited discovered it had been manufacturing a product illegally. This product was patented, and B had not bought the rights to use the patent. B immediately shut down its factory and hired a firm of lawyers to act on its behalf in the acquisition of the necessary rights to manufacture this product under the patent. And there were certain costs that were incurred. Legal fees of 50,000 were incurred during July 20X4. The legal process was finished on 31 July 20X4, when B was then required to pay 800,000 to purchase the rights, including 80,000 in refundable VAT. During the July factory shutdown, overhead costs of 40,000 were incurred, and significant market share was lost, with the result that B's total sales over August and September was 20,000, but its expenses were 50,000. Resulting in a loss of 30,000. To increase market share, B spent an extra 25,000 aggressively marketing their product. The marketing campaign was successful, and with sales returning to profitable levels in October. The accountant wishes to capitalize the cost of the patent at the purchase price of 800,000 plus the legal fees, plus the overheads during the forced shutdown in July that amounted to 40,000, plus the operating loss in August and September, that was 30,000, plus the extra marketing required, that was 25,000. So the total capitalization would have been 945,000. Briefly explain whether or not each of these costs identified may be capitalized. Explain whether each of the identified costs may be capitalized. By looking at this, which costs do you think should be capitalized and which costs do you think should not be capitalized? This question asks you to explain, right? It asks you to explain. So it's not enough just to list the costs that should be capitalized or not. You have to provide a reason as to why you would capitalize or not capitalize that particular cost. Let us start with the, okay. Someone's asking where can you find the notes? And the notes on e-learning and Teams. This I'm using the prescribed textbook. This is an ebook that I'm using right now. That is directly from your textbook. Okay. So the 50,000, can you capitalize the 50,000 of legal fees incurred?
Yes, sir.
All right, why? So if you say yes, you will not get your mark. You get a mark for the 50,000, but then you need to provide a reason.
Yes, because legal fees are, in this case, are directly attributable to.
Okay, it's directly attributable to the acquisition of that patent.
Yes.
Okay, so, all right, that is fine. What about the 800,000 to pay the rights, to purchase the rights to the patent, including the 80,000 in refundable VAT?
So refundable VAT is we don't capitalize it.
Refundable taxes must always be excluded, not only in the purchase of intangible assets, but in the purchase of PPE, investment property. Any refundable tax such as VAT will always be excluded. So the purchase price then in total would be 720,000, which is the 800,000 minus the 80,000 in refundable VAT. Okay, and then we had a factory shut down in July that resulted in a loss. Okay, so the legal costs, let us go. The legal costs, we've already correctly identified that they must be capitalized. Overhead costs of 40,000 were incurred. All right, those overhead costs, those are incidental costs that are necessary that happened as a result of the factory being shut down. Okay, so remember that before they acquired this patent, they had to shut down production. But during the time when they shut down the production, they incurred overhead costs. So what happens to overhead costs? That's an incidental cost not necessary to the acquisition of the rights. All right. The shutdown was only necessary because B had been operating illegally. Because they'd been operating illegally, they incurred those costs. Otherwise, in a normal transaction, this company wouldn't have incurred the cost related to the shutdown. Therefore, the incidental costs may not be capitalized. Okay, then we have a loss. During the shutdown, significant market share was lost, with the result that B's total sales over August and September was 20,000, but its expenses were 50,000, resulting in a loss of 30,000. So what happens to that loss? That initial operating loss of 30,000. The initial operating loss of 30,000, what happens to it?
We don't capitalize it.
Why not?
Because we don't capitalize. Is that
All right. So what is important to note you understand that you shouldn't capitalize it, but the words to explain are a bit difficult. At this point in time, all right, at the point in time, July, August, and September, they had started operating again. All right, the shutdown was only during July. All right, the shutdown was only during July, and then it started operating in August and September. So they were able to operate, isn't it? They were able to operate. So the operating loss incurred while the demand for the product increased to the normal level is an example of a cost that is incurred after the rights were acquired. So you've already acquired the rights to the patent, but because you lost initial market share, that is why you made an operating loss. You cannot capitalize those costs because the intangible asset was already available for use. So any costs that arise after the intangible asset is available for use may not be capitalized. Okay. Are there any questions? Are there any questions? It seems not. Then let us go to the next one. What happens to the advertising costs? To increase market share, B spent an extra 25,000 aggressively marketing their product. This marketing campaign was successful, with sales returning to profitable levels in October. So from October, the company was profitable once again because of a successful advertising campaign. What happens to those costs?
It's not capitalized, sir.
You should capitalize it. Why should you capitalize it?
No, I said it should not be capitalized.
Okay, you shouldn't capitalize it. And why shouldn't you capitalize it?
Sir, I think it's part of the promotion and advertising which falls under the exclusion costs.
Okay, exactly. Advertising costs are specifically excluded in terms of IAS 38. Therefore, they cannot be capitalized. Also, when you're doing an advertising campaign, you are not sure, you cannot guarantee that future economic benefits will flow, isn't it, to the entity. So advertising expenses are always expensed. All right, advertising costs are always expensed. So you see, in this question, only two items were capitalized. That was the purchase price, excluding the refundable taxes, and the legal costs. So the total amount capitalized would be 770,000. So if we asked you to calculate the amount that should be capitalized and give reasons as to the capitalization or why you do not capitalize a certain amount, it's not enough just to give figures. You would also get marks for explanations. So this can easily be a 10-mark question, although you only have two items that are capitalized. So your reasons should also be valid. Your reasons for not capitalizing or capitalizing should be valid. Okay. Great. So this, we are done with measurement. Let us now move on to the next aspect. These ones will go very quickly through them. Let me share my screen once again. Okay. I believe you can all see my screen. What happens to intangible assets acquired via an exchange, the rules are the same as those for PE acquired via an exchange, as well as investment property acquired via an exchange. You will always recognize it at the fair value of the asset given up, unless the fair value of the asset received is more clearly evident. If both fair values are not available, then you will use the carrying amount of the asset given up. That is also applicable if the transaction lacks commercial substance. So we've already dealt with commercial substance where we talked about there's no variation of cash flows, or the new cash flows would be really insignificant, etc. So these rules are exactly the same as those of investment property and PPE. You can go to the chapter of PPE where we go further and discuss what it means when a transaction lacks commercial substance. What about intangible assets acquired via a government grant? Can anyone explain to me what is a government grant? What is a government grant? What do you think a government grant is?
Is a government grant when they give you money, but they don't expect you to pay back?
All right. So you're given a certain amount of funds by the government, but you're not required to pay that back. Okay, exactly. So if we look at government grants are dealt with in terms of IAS 20 government grants. And we are not going to deal with government grants, but anyway, we can test you in terms of how you will measure it. One way you can also think of it, some of you are students that are funded by NSFAF, okay? You currently have loans. There's been a lot of petitions from students by the SRC, etc., and different bodies, student bodies, that those loans should be converted to grants, whereby at the end of your studies, you're not required to pay back those loans. So this is the same thing that happens here. The government will provide some funds in order for the business to purchase an intangible asset. All right. And the business is not really required to pay back the intangible assets. They're not required to pay back the government grant. So at what value will we measure the intangible asset? The intangible asset will be measured at the fair value of the asset acquired, all right? The fair value of the asset acquired, so how much was paid to actually buy it, or any nominal amount plus any directly attributable costs. What is the nominal amount plus directly attributable costs? So we may not, we are given the option of not necessarily using the fair value of the government grant, but there may be some, let's say, incidental expenses, or a figure that you're given that, okay, just pay this amount, which it does not necessarily equal. It does not necessarily equal to the fair value. It may be significantly less than the fair value. Then you will recognize the intangible asset at that amount plus any directly attributable costs. However, in this instance, if the intangible asset is measured at its fair value, you should expense any directly attributable cost to avoid like double counting. All right, because let us say you are told that the government grant, not the government grant, the intangible asset costs 150,000. In those costs, maybe you had some directly attributable costs, legal fees, and other expenses that you might have incurred in calculating the in acquiring the intangible asset. If those incidental or directly attributable costs, let's say the legal fees, etc., are not included in the costs or in the fair value of that intangible asset, then those costs should be expensed in this instance. All right, because when we say an asset is measured at its fair value, that's a fair value means the amount that would be exchanged to acquire that asset by the market. All right, so it's already reflected at its market value. So you cannot now go and add additional costs such as legal fees, etc., because the asset is already measured at its market value on that date. Okay. And the last one that we're going to deal with is intangible assets acquired via a business combination. What is a business combination? What is a business combination? Can anyone help me? What is a business combination? It's in the name, business combination.
Combination of businesses?
Yes. How would those occur? How will that occur?
When two businesses merge together.
All right. So let us look at it in this instance. We'll look at it as where one business acquires another business. One business acquires another business. Now both of those businesses will be part of the same group. Okay. And so where you have intangible assets that are acquired as part of business combinations, you have to measure these intangible assets at their fair value, all right, at their fair value. And then all other non-identifiable assets will be recognized as part of goodwill. So normally what happens during a business combination is that the value of all the business's assets will be determined as well as the business's liabilities. So you'll subtract the value of the assets from their liability to get the value of the net assets, all right, or to get the value of the business, the equity of the business. Now, in some instances, you might have things such as internally generated goodwill or so that you would not be able to capitalize, all right, in terms of the standard, okay? And you might pay an excess amount over the equity or over the value of the business. And that excess amount is known as goodwill. All right, so, and goodwill is an intangible asset. If you have an intangible asset that is separately identifiable, you should recognize it as fair value. So if you have things like patents, trademarks that are included in the assets of the business, those ones should now be measured at their fair value. All right. However, if there are other non-identifiable intangible assets there, you cannot capitalize them or you cannot recognize them. They will just be treated as part of goodwill. So what have we learned? That we have learned the definition of intangible asset as well as how to measure and recognize an intangible asset. I want to refer you to Gripping Gap, where it deals with government grants. So read up on those sections on government grants from page 477, as well as goodwill. Wow, not goodwill. Intangible assets acquired in a business combination. You should read up on that in Gripping Gap. And you do the related example. That's example 8. Okay, sorry, I thought I was sharing my screen. Let me share my screen again. I wanted to share the relevant pages in Gripping Gap. Okay. What I was referring to is this, that you should, on page 477, that deals with, no, not 477, from 478, that deals with the exchange of assets, the exchange of intangible assets, as well as government grants, intangible assets acquired by government grants. Please go and read through those relevant sections in the textbook. All right, please go and read through the relevant sections in the textbook, as well as intangible assets acquired by a business combination. Okay,